All right, so picture this.
Okay.
You are craving like the most delicious bag of chips,
Mm.
and you find this vending machine,
Yeah.
but it's cash only.
Oh, no.
And you check your wallet,
Yeah.
and all you've got is a credit card. Talk
Classic.
about a liquidity problem, right?
Exactly, yeah.
And that's what we're diving into today, this whole idea of liquidity.
Mhm.
And you don't have to be, a Wall Street hotshot to care about this stuff.
No, not at all.
We're going to break down why it matters to everyone.
Absolutely.
So we're looking at this Investopedia article, right?
Yeah.
By Adam Hayes.
Okay.
And this guy, he's got a PhD and a CFA, so
Oh, wow.
we're in good hands.
Yeah. He knows his stuff.
He really lays out why liquidity is like important for everyone.
Yeah. It's true. It's not just for the finance people, It really impacts everyone's daily life.
Right, exactly. Like the article says, liquidity is how easily you can turn something into cash, but, and this is key, without losing value.
Right, right. That's the important part.
It's not just about having things. It's about like what you can actually do with them when you need to.
Exactly.
Think about that vending machine, right? Like you had the money for the chips, technically,
Mm-hmm.
just not in the right form.
Yeah.
And because of that, no chips for you.
Tough break.
It's like that with so many things. Understanding liquidity is about making sure your money is actually working for you no matter what.
Yes, exactly. And the article makes this really good point that there are actually two main types of liquidity. Yeah. There's market liquidity, and then there's accounting liquidity.
Okay, so two different flavors of liquidity.
Exactly.
Mhm.
And understanding the difference can really change how you look at your own, financial situation.
Okay, so break it down for us. What's the difference between these two?
All right, so imagine this. You need to sell something, and you need to sell it fast.
Yeah.
If you've got stocks, and you got to sell them quick, usually pretty easy, right?
Yeah, I mean, I get that.
That's because the stock market, it's generally super liquid.
Lots of action going on.
Exactly. Tons of buyers and sellers, trades happening every second.
Mm-hmm.
But what if you had to sell your house quickly?
Ooh, yeah.
Whole different story.
Yeah.
Real estate, that takes time. You need to find the right buyer at the right price. So real estate, often way less liquid than something like, those stocks we were talking about.
Makes sense.
So that's market liquidity in a nutshell.
Okay.
How easy is it to buy and sell in a specific market,
That makes sense. Okay, but what about this accounting liquidity? What's that all about?
So that one's more about your ability to pay off your debts, right?
Okay.
With the assets that you have available, right now.
So it's less about the market as a whole and more about your own personal money situation.
Exactly. And it's not even just about, paying your bills on time. It's
Mm.
about whether you've got enough cash that's easily accessible to, make things happen when you need to.
So it's about having options.
Exactly.
Okay, I think I'm starting to get this. So it's like that example in the article about buying a refrigerator.
Right.
Yeah.
Yeah.
Like if you've got $1,000 cash, you're good to go, right?
Right.
You've got the liquidity to buy that fridge, no problem.
Easy peasy.
But what if instead of cash, you had this rare book collection?
Yeah, okay.
And it's worth, the same amount, that $1,000.
Right.
But could you walk into an appliance store and trade your first edition Hemingway for a fridge?
Probably not.
Probably not.
It's not quite as easy as swiping your debit card, that's for sure.
Exactly. So even though those books might be valuable,
Mm-hmm.
finding someone who wants them and is willing to pay a fair price quickly,
Yeah.
that's going to be tough.
Definitely not a sure thing.
It takes time, You might have to haggle,
Oh, yeah.
put in some effort.
Yeah.
So even though you technically have the money in those books, it's just not as liquid as having the cash in hand.
Exactly. And that's the key difference.
It's your money's kind of frozen in those books.
Yeah, sort of, yeah. It's there, but it's not exactly ready to use.
Not as handy when you need to buy a fridge.
Exactly.
So having enough liquid assets, things you can actually, turn into cash quickly, that's important for everyone, right?
Yeah.
Not just big companies.
Oh, absolutely. This isn't just about Wall Street and stocks. This is about your everyday life, your personal finances.
Right.
Yeah, and this is where it gets really interesting because the article talks about how companies measure their liquidity, and it's with these things called financial ratios, right?
Okay.
But the cool thing is these same ratios, you can apply them to your own life.
Mm.
Even if you're not, running a Fortune 500 company.
That's your brain froze. Now you're losing me.
I promise, it's way less scary than it sounds.
All right.
So let's say you're thinking about starting a side hustle.
Okay.
Something you've always wanted to do, right?
Yeah.
You've got the skills, you're passionate about it,
Passionate.
but maybe your cash flow isn't quite where you want it to be yet.
Yeah, been there.
Right. So before you quit your job and go all in on this thing, one thing you could do is look at your own personal current ratio.
Current ratio.
Yeah, and basically what that tells you is, do you have enough easily accessible assets to cover your expenses, your essential bills for a few months, just in case, things with the side hustle take a bit longer to take off than you expected.
So it's like having a financial safety net before you make that jump.
Exactly. It's like, can you cover your bills even if your income from your job dips a little bit while you're getting this thing up and running?
That's a really smart way to think about it, actually.
Yeah. And then there's another one. It's called the quick ratio,
Okay.
which is similar, but it's even more about your immediate super short-term needs.
Okay.
So think of it like your car breaks down, right?
Yeah.
Or you suddenly need to fly home to see family.
Yeah.
Do you have enough readily available funds to cover that without having to sell anything or rack up a bunch of credit card debt?
So it's about having that peace of mind.
Yes.
Knowing you can handle those curveballs.
Exactly. And if we're really talking about weathering a financial storm, that's where the cash ratio comes in. That one is all about your most liquid assets. The cash you have in the bank, maybe an emergency fund.
Okay.
Maybe even that cash your grandma gave you for your birthday that you've been hanging on to.
Yeah.
It's like, if your income stopped tomorrow, how long could you, keep things afloat?
Wow.
It's a measure of your ability to meet your short-term financial obligations using only your most liquid assets, nothing else.
So you're not counting selling your stuff or?
Nope, just the cash you have on hand.
Okay, so even though these ratios have kind of intimidating names, they're really just different ways of looking at how much financial wiggle room you've got.
Exactly. They're just tools to help you understand your financial situation better. And speaking of real-world examples, the article brings up an interesting point about the stock market.
Yeah.
Remember how we were talking about market liquidity?
Yeah.
Well, they use the example of Amazon, Intel, and Ford stock to show how this plays out with investments.
Oh, okay. Yeah, I'm intrigued. Tell me more. So Amazon, Intel, Ford, how does liquidity play into those companies?
Well, the article, it points out that on March 13th of 2023, almost 70 million shares of Amazon stock, they changed hands.
Wow, that's
a lot of trading activity.
that's a lot of people buying and selling.
Exactly. And what that means is it's really easy to buy or sell Amazon stock without, causing a huge shift in the price.
Right.
So that's high market liquidity in action.
Okay, so more buyers and sellers, smoother sailing for your investments. What about Intel and Ford? How'd they do?
Right. So Intel, their trading volume was a little lower that day.
Okay.
So maybe slightly less liquidity.
Interesting.
But then there's Ford.
Yeah.
They had a whopping 118.5 million shares traded.
Wow.
That's huge. And it shows you there's high demand for Ford stock.
People want it.
Yeah. Investors, they're confident they can buy or sell it easily, no problem.
So high liquidity, it makes a stock more attractive?
It can, yeah, because it feels less risky.
You're not going to get stuck holding the bag if you need to cash out.
Exactly. It's about having those options.
So all this talk about stocks and ratios, it really just boils down to understanding risk, right?
Absolutely. And that brings us back to why liquidity matters in the grand scheme of things, for you, for me, for everyone.
Right.
The article, it really drives home this point about the risk of having too much of your wealth tied up in illiquid assets.
So having all your money tied up in that rare book collection.
Exactly. Imagine you need to buy a refrigerator.
There it is again, that fridge.
Right. But instead of a new fridge, it's, a medical emergency comes up.
Oh, no.
Or maybe it's a business opportunity that you can't miss.
A chance to triple your money.
Exactly. But if all your money is stuck in things that are really hard to sell quickly without losing money,
Oof, you're in trouble.
yeah, you're kind of stuck. You might have to sell at a loss, or even worse, completely miss out on that opportunity.
That's the danger of illiquidity.
Exactly.
So it's not about having all your money in cash buried in the backyard.
Right.
It's
Yeah.
about finding that balance.
Exactly. It's about having some liquid assets. Think of it like your financial safety net.
Okay, I like that.
It lets you handle those unexpected things that life throws at you, You can jump on opportunities and you sleep better at night knowing you've got options.
It's about having the freedom to act. when you need to.
Exactly, exactly. And that's something everyone can relate to.
Right. Whether it's a refrigerator, a business opportunity, or just knowing you can handle whatever comes your way.
Exactly.
Well, on that note, this has been a really interesting look at liquidity. It's not just a finance term. It's something that, like, touches everyone's lives.
It really does.
And for our listeners out there, here's a little something to think about. What's your own liquidity score?
Ooh, I like that.
Like, if you had to come up with, say, $5,000 really quickly, how easy would that be for you?
It's a great question to ask yourself.
It really is. It might be time to, take stock literally or figuratively and make sure your money is working as hard for you as it can.
Couldn't agree more.
This has been an awesome deep dive into liquidity. Until next time, everybody, stay curious and stay liquid.
Stay liquid.